Welcome to another Bark question video. These are videos where I answer the questions of alpha members, and I'll be releasing this on YouTube and Rumble. And since you're not an alpha, I'll make sure that in this video you'll get the full value. I'm not going to cover anything that someone that's in my training or is an alpha member would already know. So I'll make sure that I cover things that you would be able to figure out and reason within your own trade system. But for alphas, and since we're getting new members all the time, just a reminder, where you find the actual Barks is go to the fundamentals in Den, and then here you'll see Barks answering trader questions. You can see the first one we have here is profits where, and then fade trading without guessing is the next one. That's where you'll find these Barks. So now with that long intro, let's jump into the question and the answer. And like I mentioned before, I'm probably going to answer this in a way you probably don't expect. So here it is. Is there a chance you can provide your risk range on an account per trade or average daily % gain on an account? I see the big P&L, but it would be good to have something that I can compare my own progress to. I'd imagine our account sizes vary a fair bit. I know your results are not typical, but I strive to be half as good as you. So that last line, let's talk about that last line. And this is just more mindset than answering the question. You said, and I know you're being respectful, and you probably wouldn't word this way, but here's how I want you to think about this. You said, I know your results are not typical, but I strive to be half as good as you. I want to take that last part, and here's where I wouldn't want you to maybe word it this way to me, but here is how I want you to think about this. I would prefer, instead of thinking I strive to be half as good as you, which is okay, I get it, I want you to know and think and believe I will be at least twice as good of a trader as Rex Dog. Whatever you call me. If you call me Rex, whatever. I want you to believe and think from the perspective of not striving to be half as good as me. I want you to be at least twice as good of a trader as me, at a minimum. I don't even want you to strive. I want you that's your goal. So that's just a mindset thing. And yeah, I know it's for some people, you don't need that. But look, that's the way I want you to think about trading, is that don't compare yourself to me. And if you do, be twice as good as me. Twice better a trader than me. All right. Here's kind of the fundamentals. Here we're going to answer this question. We're going to get into charts too. I don't believe real retail trading can be answered the way that you want. And I'll provide an example with this, and then we'll jump into charts, and we'll do this real in charts. If you were at a large bank or a prop firm, it would be answered differently. But it's not the same. The number one reason is you're a retail trader. You're not at a prop firm. You're not at a big bank. And if you were at a prop firm or a trading desk, you are well capitalized. And as a retail trader, you're most likely not. This is one of the biggest reasons why actual retail traders fail, is because they're not properly capitalized to trade. So they don't have enough capital to properly trade within a risk profile where they can be successful. So it's harder. Also, the Rex Dog trade system isn't always in trade system, so its risk parameters are different than most year one traders have, just retail traders, and year one traders have at a prop firm or a trade desk. And I know I'm speaking high level here, but you need to understand this from a high level fundamental aspect in order to answer the question that you actually want, or provide you with the answer to the question that you're asking. So the next thing is, let's compare this to running back rankings. And this is where, if you look at this, and I apologize for people that are out of the U.S. and football isn't your number one sport, or football for you is what we call here in the U.S. soccer. So I get it. You actually, probably don't know much about football, but football is the way I can relate it to you. So these are, I think, the top 5 draft picks of this current year. They're college athletes. I don't even know their names because I'm not a big sports guy. I do watch football, but I just don't remember the names, and I don't watch the draft. But I think these are the top 5 predicted draft picks for this year, for the next year of football, of professional football. So the questions I would ask you, and how I'd relate it to trading, is we're talking about averages. And these are the top 5 draft picks, prediction picks for football this year. What is the average run that these new running backs should have in their first year? Now, there's probably stats that people would know and people would predict. But here's the thing. Let's think about, answer this question for yourself. Are you, an NFL athlete is in the top percent. Someone that's drafted in the NFL is in the 1% of athletes in the world, I believe. There are at least 3% of athletes in the world. I would say. So they're operating at such a level. Are you, as a trader, would you even be a draftee at the NFL level right now? And I would ask you that, as a trader, where are you at in your career? The next way I'd relate it is the NFL has feeder leagues, and they have a path to becoming an NFL player. And typically it's like this. It's called Pee Wee. Now, I don't know if they call it Pee Wee anymore, probably because they don't want to hurt these players' feelings anymore, and Pee Wee probably hurts their feelings. But I would ask, well, you're teaching kids to tackle other people and be aggressive. Like, do you really need to worry about hurting their feelings? So I think it's called youth now. But then you have Pee Wee League, you have high school, you have college, and you have the NFL draft. This is the typical path that an NFL player will take. Sometimes they don't, but this is the typical path, especially someone that's going to be drafted. The other thing I'd ask is, could you have predicted the stats of any of these players in Pee Wee League or as they progressed? Could you give, at Pee Wee League, when they're just a 6 or 7 or 9-year-old playing football, could you predicted the average run that they should have? Could you predict the average run that they should have every game in those leagues? And then when they got to high school, should you have been able to predict? Of course, as they moved on in their career or their path, you'd be able to predict better. But could you have sat down with them and predicted it? And how do you relate this to trading? Where are you at in your journey as a trader? Are you Pee Wee League? Not trying to hurt your feelings. Are you high school? Are you college? Are you NFL draft? Or are you in the NFL? Now, of course, at the end of their career, you could have you'd know these stats. Or as they get further along in their career, you could start to predict these stats. Now, the other thing, though, is as they get older, the one thing that you don't deal with is the trader, so you should be happy you didn't choose the NFL. As you get older as a trader, typically you get better. As you get older as an NFL player, your body's eventually going to give up on you, and you're just not going to be able to perform. So you're actually lucky that you're a trader. So let's talk about this before we jump into charts. And I just want to make this crystal clear on how I'm making the relation. Is that with trading, the first thing you need to do is manage risks, then try to figure out the rest. It's the same way with kind of what I just explained with the NFL. Like they want to manage risks. So what they want to do is they want to teach NFL players or Pee Wee players, young players, the fundamentals, and then they want to teach them how to not get hurt. They want to teach them to properly play the game so that they don't go out there and break bones, and they don't go out there and hurt themselves and hurt other people. That's risk. That's how they manage risk in football. Of course, they're in a high-risk, high-contact sport, so there's more risk than something like, tennis or something like swimming. You're just going to have more because you have more contact. You're primarily boys and men going against other boys and men that are alpha males. There's going to be injuries. There's going to be risk. Same way with trading. You're in a market where it's one of the most competitive things you can do in the world. You're in a market, a bunch of alpha people, like not just our alphas that we have in our group here, not just Rex Dog alphas. the alphas at the banks and the prop firms, you're competing against alphas. Generally, beta people, and if you believe this beta and alpha thing, generally traders are not betas. Generally, traders are alphas. So you're competing against other alphas in the trading world. Doesn't matter though, because the way you need to think about it is it's not about those other traders. It's only about you. So what you need to do is take what the market allows you to take on any given day trading your style. Don't have some kind of arbitrary percentage, meaning I should make 2% a day on my account. Take what the market allows you to take on any given day trading your style. Some days the market is going to be volatile and it's going to be perfect for your style, and you're going to be able to take 10 to 15%. Some days it's going to be 1%. Take what the market allows you to take on any given day trading your style. Also, take what your emotional state of the day is allowed to provide you on that day. What do I mean by that? I mean, not only does the market decide or give you an opportunity, given your style, but your emotional state that day plays a factor in whether or not you can maximize that day. So, like if you have a 5%, let's say you have a 2% profit target every day. This is different with risk, and we'll talk about that. But let's say you have a 2% profit target every day, but the market doesn't allow you to get that because the market, the way it's behaving that day, even though you're trading the system, it's a little bit more challenging to trade the system that day, and you have a 2%, but you only make 1%. Well, you traded the system as best you could, and that's what the market gave you that day. But let's say the next day, the market's perfect for your style that you way to trade, but for whatever reason, maybe your cat bit you or scratched you, and you're mad that your cat scratched you, and your emotional state is screwed up, and you just emotionally aren't trading as good. Okay, well, I understand the need and the want for an average, but there's, at this point in time in your trading career, you should strive for that, but there's too many factors to limit yourself and to think and put yourself in the box of an average. It's just, I firmly do not believe, and I've been doing this since 2018. I mean, I'm myself, and I've been training and having members since 2018. I just don't believe as a retail trader, I can give you, well, I'm going to provide the answer on how you get the numbers, I think, but I don't think that you can provide accurate numbers from a retail trader perspective. But here's how I'm going to answer this question for you. I'm going to answer it as if you were a prop trader for my firm. I have a prop firm. It's called the Rexdog Prop Firm, Rexdog Trade Firm. I don't know what we'll call it. Rexdog Prop Firm Trade, whatever. Anyways, you're a trader for my firm. Okay. By the way, this is imaginary. I'm not an accountant. I'm not an attorney. I know nothing about trading. This is an imaginary prop firm. Okay. So in imaginary world, or in Willy Wonka's factory, I have a prop firm, and I've hired traders in my prop firm. Here's how I'd answer this question, and here's how I would allow traders to trade in my prop firm, capitalizing them correctly. Let's jump over to charts. Now here we are in a 5-minute chart. Now this isn't the 4-chart setup, so we're not going to have the 4-chart setup because I want to explain a high level concept, and I'm going to actually explain this two ways too. I'm going to do it from the perspective of if you just had an MNQ, if you're trading the MNQ and you had a $3,000 account, but if you were in my prop firm, my imaginary prop firm, you would be capitalized at least 10 grand at least. So that's the first thing I would mention. Now you can see I'm already in the trade here. The other thing that I added is the DOM. So we're looking at the 5-minute chart, and then we have the DOM. Now you can add this, just add the DOM. And then why I wanted to add the DOM is because this provides us with quick calculations on our loss as well as our gain. And of course, this is one lot. So we're in one lot on the MNQ, and if we, right now, if where we entered was right here, obviously, really clear, is at 1308, spot 50. You can see my entry right there. And if it goes up to 75, I make 50 cents. Now, I know most people get this, but with the DOM, you can see all the way up here. Now, the first thing I would add here is that I entered a trade. I entered this right here at the RDA. I thought I was going to get done with the intro to this video. I was a little ambitious. Thought I'd get done within a few minutes, but this trade, I was already profitable as well. So I should have already took profit on this trade or had a break-even stop loss when it got kind of near profit here. Plus, I'm not trading in thirds, but I entered this trade where the system told us, right at the RDA check. So I would have already had a profit in this trade as far as a scalp trade. But now I'll answer this question too. Some might wonder, well, how do I get those numbers on the DOM? Well, if you go here and you go view settings and you go to settings, you can choose P&L and ticks and then show estimated P&L. So that's how you could do this in the DOM if you even want to use this in the DOM. But I would suggest for most traders, you don't want to see this. Maybe you do, but like you should be able to calculate these things kind of in the chart. But if you want to see it, the problem is if you see this sometimes, what happens is you start planning your trades ahead of time. Meaning that, oh, wow, look, if I'm in this trade and it gets down to here, it gets down to 1304.50, right? You're saying, well, I'm going to make $28 on just one lot in the MNQ. Well, okay, that's good to see. But then you have to really be good at correlating that and saying, okay, is that what the chart tells me that is possible? So that's one risk of having the numbers in the DOM. All right, let me answer the question. Now, I entered the trade at the RDA. Let's answer this from a prop firm perspective. And let's say you're a prop trader and let me answer this let's say you're a prop trader and actually I just gave you 3K to trade with, meaning that I said, hey, you have a 3K account, you have a $300, if you lose $300 on a day, that's your loss limit. You can only lose $300 a day, which is what? How much is that? That's much more than what most YouTube fake traders, and I'm going to start calling them YouTube. I'm not going to name names, but I'm going to start calling the YouTube traders fake traders because they're fake traders. So in my belief, many of the YouTube traders out there that you see they don't trade. They make more money from training. So I'm going to just start calling. I'm not going to name them by name. I'm just going to say they're fake traders. And how would they prove that? They would stream their system. They would stream trading. So they can easily prove it by streaming. So you can watch me day after day after day, and you can see whether or not I can trade or not. I either can trade or not. You can watch the stream. So another topic, another question, another answer. But so if you were, let's say, a prop trader, 3K account, you'd enter a trade here, and let's say that I have a protective stop all the way up here. See my protective stop? I'm one lot. My protective stop is all the way up here. You're allowed to lose $300 a day, and you're allowed to and you would get liquidated in the account if you had $500 in loss, meaning that you couldn't trade for the rest of the day. So I would allow you to have a loss of $300, which is more than most traders say. You should only be risking 1 to 2%. Okay, what's 1 to 2% of 3K? Well, 1% is what? $10. What is $10 times 3? $30. So most YouTube traders say you should risk 1 to 2% on a trade. Okay, fine. Whatever. But let's just ignore that advice. And let's say that, okay, on this trade, I entered here, and my max loss at this point in time, if we go here and go all the way to the DOM, to right here, 13,097, we would lose on this trade $157. If we stayed in this trade for whatever odd reason, and then it went up and took us out at our protective stop loss all the way up here above the opening range high of the previous day. Now, some of you probably don't know or are looking at this and saying, dude, you're up at 1:54 a.m. You are insane. Do you not have a life? And you'd probably be right. But no, I'm on treatment and I can't sleep. So it's either I sit around and watch Netflix, or I do awesome trading videos, or what I consider awesome trading videos, at 1:54 a.m. So let me ask you a question. If you got stopped out here, are you within my risk management of my prop firm? Yeah, because I said you could lose up to $200. I mean, you could lose up to $200 a day, or did I say $300 a day? Whatever I said, I would be okay with $300 a day if you came to me and you had your 10 trading days in demo account all green. I'd say, look, number one, we'd look at your stats to the demo account, but then I'd say, look, I'll allow you to lose up to $300 a day, but then you're cut off for the day. If you ever get to 500 open profit, negative open profit, you're cut off, you're liquidated, and you're cut off from trading. You're taking too much risk. I'd allow that. I would allow that, but most traders, that's too extreme. I'm just giving an extreme example. Now, let's say instead of having a protective stop here, what you did is that you put an entry right here, and let's go up to 2 lots, or let's go up to, actually what you would have to do is go up to 5 lots. I'm not saying you trade this way. I'm providing an example, okay? Because this example, and I know I'm being long in the tooth in this video, but this example, and this is for the reals, meaning that you're a real, you actually want to be a successful trader if you're still watching this video. If you got bored and left, number one, I'm not talking to you. But if you got bored and left, I'd even question if you even have the ability to be a successful trader. So if you're here, you have at least proven to me that you at least have the attention span greater than a goldfish. So you have at least the ability to be a successful trader, is the way I look at it. So let's say that for whatever reason, and I'm just being an extreme example, you say, I'm going to enter a trade here, and then I'm going to enter 5 more lots up here. Now, where would that put your basis? Now, without us getting into calculation, meaning that you have, your position is right here, but you entered 5 lots up here. I could do the calculation, I just don't want to because it's 2 o'clock in the morning. But let's say that your basis would be right here. Let's just say your basis would be right here, meaning that your total position size using FIFO would be right here. We could do it in half, but it would actually be better than you think it is. It would be right here. Let's just say that your total basis, it might even be up here. I don't want to do the calculation, I'm sorry. Let's say your basis, meaning that, okay, you're entered here. It actually would be much better than that. I'm so stupid. It would be right here, around here, I think. You are in total 6 lots. You were entered a position down here, and it didn't go in your direction, and you got actually filled on 6 lots. You're in total 6 lots here, but your basis is here. But then within 10 minutes of you getting picked up in this position here, you were in profit. And then you profited not just like what you're profiting now, like $3.50, but from this position here down, or from this basis position here, you got out of the trade and you profited, let's say, $100 on this trade, which is what? How much is $100 on a 3K account? On percentage wise? Well, we know $300 is 30%, right? Because 10% of 1,000 is $100, right? So if we just do simple math, your $100 trade is what percentage? It's 3 and some odd percent, right? Of actually this account, 3K account. Hopefully it's late at night, so I know I'm doing the math right. Okay, let me just ask you a question. Is that a pretty good percentage based on a 3K account? Now, how you got there might be questionable, but did you execute that trade using your style? Now, you know that you should be in the, and I'm using this extreme example purposely because this extreme example should never happen in the rec stock system. It should never happen. But if you traded this way consistently, who am I to say that your trade system isn't the way to trade if you're consistent with it? And I use this extreme example. I know it seems like I'm like going farther away from your question. It could seem like that. But how to answer this question is, how are you trading the system from the maximum that you're allowed to lose, and how are you ending the day in a P&L perspective? Look, I know what I'm sharing here is contrary to what you read in books, is contrary to what you see in other traders, and I know it goes against the thinking, like I said, that you see out there. That's because I believe most traders on YouTube and most books that you read haven't properly contextualized how to be a successful retail trader, what it takes. So with this perspective, how would you define? And you know, the other thing you need to understand about my videos, and I'm only explaining this more for people on YouTube, but I try to give you an answer, and I try to give you a clear and concise answer. But what I also try to do is I try to teach you to fish, meaning that I want you to think, and I want you to figure some of this stuff out kind of for yourself without me telling you. By the way, this is the 50% OR. Without me telling you precisely the answer. Now, if I have a precise answer that I believe, I'll tell you. For instance, there's only two trade types. There's a fade and momentum. You can argue with me all day, but I'm right. So go ahead, try. I think I'll be more right than you ever would be in an argument. There's only two types of trades, fade and momentum. There's only 3 stop loss types. So when I have a distinct answer, a clear answer, I tell you that clear answer. When I don't, what I try to do is I try to provide the answer that I think is best, but then also provide you with the solution on how to figure out the answer for yourself that works for you. And this is one of those type of questions where the other way to trade this, see, here's how you would trade this, is that I'm going to enter at the RDA, and I'm going to enter to this traded right. And you can see we're up $28 right now. Well, so let's just talk about this. This is actually perfect. I'm glad this happened in real time. This is friggin' awesome. By the way, this is a live account. I mean, it's an MQ, so I'm not trade. I didn't want to trade the NQ because I wanted to trade the MNQ. Well, look at this. We're in a 3K account, let's say, and we're up $30. And what were we down at one point in time? Well, let's just look at this. We were down, and we're only 1 lot, so we're not even maximizing this trade because we're not buying in 3 lots. So I'm going to put my stop loss because we're going to maximize our profit. I don't want to just make a little bit. I want to make $40. I want to make $38. I want to make $39, whatever it is up to, right? So, look at this. What was the maximum loss we were in this trade and how long? So this trade, I entered it here at 12:50. It is now 2 o'clock. Now keep in mind, this is the overnight session, so it moves slow, low liquidity. It moves like watching paint dry. But we entered this trade. I had a protective, when you saw it, I had a protective stop loss of 1 all the way up here. That was my protective stop loss. And that wasn't a protective stop either. It was a friggin' entry. I'm such an idiot. But okay, we started this trade at 12:50 for a total of basically 1 hour. Yeah, for a total of 1 hour. Well, actually, we were in profit, but then we got out of profit about 135 or so for a total of 30 minutes or so. We were in negative profit, meaning that we were no longer profitable. And then suddenly at 2 a.m., The market ripped in our direction we expected, and now we're in a $30 gain. Now, what were we down there? Maximum, we were down 13,027.75. We were down $18. Okay. That was the max we were down. So we could have noticed that the RDA band, we could have put our protective stop up here, actually. And that would have been, but look, what I want to show is, okay, was this an executed good trade? Meaning our protective stop was all the way up here. It could have been right here. Could have been over here. Our protective stop was all the way up here where we're going to lose $127. But then now we're going to take a profit of what at a minimum, let's see where a minimum what we're going to get in profit is $21. If the market works the way it usually does, meaning that it doesn't gap over our stop in the black swan event, we're going to make $21 on this trade. Minus fees, it'll probably be 18 or whatever it is, right? Maximum fees. Let me ask you from a perspective of trying to define the risk on that trade and the percentage profit that you should have. Could you have defined that consistently at the level of trader you are right now?
Stop filled.
All right. What do we get filled at? Well, whatever the P&L is. I don't know what the P&L is, so we'll look at that here in a second. I'll add that actually. And well, let's look at these stats. Now, I do apologize. I actually entered 2 trades. I forgot I entered another trade before, and this is just this day. So the stats are going to be a little off, but we executed 2 trades. And let's just go through the stats. And I know that this is going to feel, I already know this video is going to be frustrating because I'm not providing you the exact calculation. I'm not providing you the exact percentages. I'm not providing you exactly what you want. And you want the exacts. And you probably want more of a focused guidance than what I'm providing you. And that's because I don't know your level of aggressiveness as a trader. And I don't know how you've adopted fully the system that you have in your hands. So I can lead you in the direction of how to answer the question for you. And this is when I say you, I'm talking to everybody. But I can't, let me propose this answer to you. If I could answer this question distinctly, do you think that maybe, possibly, number one, do you think I would be hiding it from you? That's the first question. Number two, do you think I'd find another opportunity in the trading world to apply my system? Is the way I would ask that question. If I could, let's say I could define this question precisely, would I be exploring other opportunities with the system is what I would ask you. And maybe I have. Let's go through the stats. All trades. Total P&L, $12.52. Profitable trades was the one we just executed, $21. Losing trades was $5. With fees, 50-50. With fees, $21, $5. There's a point to this, by the way. P&L history, cumulative without fees, and P&L history as far as how it looked, and that's not what we took, but that's basically how it looked. And then P&L distribution, real simple. Okay, with all those stats, we just looked at all of them. I didn't mention the details of why I'm just showing you. What is our, right now, what would be the percentage profit that we made on this 3K account? You can answer that question. What did we risk? Well, we risked a substantial amount. But if we managed the trade and executed it correctly, meaning it never hit our negative $150, was that last trade a successful trade? I would ask you. Now, from a risk perspective, if we would have been taken out at $150, of course you would say no. And you would say no if you're a simple trader and said that, well, your risk, your stop loss was so high, that was such a risky trade. But then I would ask you, was I watching the chart and was I managing the trade as a scalper is? Meaning, was I managing the trade actively? Or was it a set and forget trade? And what was the probability that my protective stop loss was going to be hit before I had an opportunity to manage that trade from a risk profile? And if my stop loss would have been hit and I lost $150, yeah, that's a massive, comparatively to the profit that we would predict in this trade, which I didn't even cover, that is a massive loss. But that's a protective stop loss, meaning that I don't want it ever to get hit. Meaning if it gets hit, something drastic in the market happened and my account isn't liquidated, I only lost $150. Meaning, yeah, that's a big percentage of this account, but it's not gonna liquidate me. I'm not gonna be just automatically liquidated by my broker. So I present it in this way because this is the way to think about it. I presented it in this way because you want, what do you want as a trader? You want what is your average daily percent gain and what is the loss or what should I have for my risk range per account. And I could give you some lame answer like 2%, 10%, 15%, 5%. I don't care. Pick a number out of a hat. It doesn't matter. Or I could give you the way to look at it. And if I'm not clear totally in this video, tell me and I'll create another bark that's just very focused on assuming you watch this video, and then I could provide like additional like things that maybe didn't make sense on like a 2 to 3 minute video. Another bark. But the other thing you could do, I share my P&L and you could do the calculations yourself. Now the thing you don't know is the account size. So, but make up an account size that would be, here's what to do. Since I don't share my account size, look at if you mathematicians out there, look up or you could take my P&L, my average P&L from the days that I trade, that I share on the website, and you can average that up, and then average the minimum amount of capital I would need to be able to trade that without being liquidated. Is one way you could do that. And then you would have my number. That's not the real number, but you would have my minimum number. I know I spoke high level, but I just gave you, if you wanted the exact answer to this person's question, I just gave you the solution on how to get the answer. Meaning, you take all the P&L that I've shared, and then you figure out from a broker perspective, what is the margin, what is the available capital I need to have that wouldn't get me liquidated on those type of trades. And then you can figure out the numbers of average daily percent gain and average daily risk. But so you could figure it out. You could reverse engineer it. It's not worth your time doing that. You can do it if you just have an extra hour and you just have nothing better to do. But it's not worth your time. But go ahead. Go at it. So let's do another trade. and just finish this video up with an example. Imaginary 3K account. And we're going to do a fade trade. So we're going to break the system here. Meaning we're going to go against the system and we're going to do a fade trade. And we're going to do a 3-lot fade trade. And we're going to market buy.
Order filled.
And then we're going to put our protective stop. We're going to change our stops to chart. So we're going to go here and we're going to go stop type. And it is a stop. So we're not going to have a trailing stop. We're going to have a fixed stop. And then what we're going to do is we're going to put an overall protective stop down here. Now the other thing that we're going to do is that we're going to then put a just using straight up price action, right? We could take off all the indicators here. Let's do that. Let's just take off all the indicators. I want to just go raw. Let's go naked. And let's go to chart settings or here. Let's turn off this and turn off this and turn off this. Let's just do raw price action. All right, raw price action says there's a level somewhere around here, right? And let's add another 3 lots here. Just to show you. Let's go right above that high right here. Let's say right here. Now let's put another protective stop. Same area. I like to do separate ones this way. I could just do 6, but I like to do separate ones this way. It's protective. We don't ever want it to be hit. We're just protecting ourselves. What's the most we could lose now, right now? We're doing a fade trade. So number one, we're doing a trade that's against the system because the system hasn't turned bias or momentum long yet. But it's a fade trade. Fine. What's the max we can lose? We'll go down there. We're down to 12,939. So this is going to be quite a bit. This is actually a pretty risky trade, obviously. I intentionally did this, though. 12,939. We would lose $441 on just this position right here. Actually, this is the bottom position. So this bottom position, we'd lose $441. That's where we'd be in that bottom position. That's well outside of our risk parameters. Well outside of it. Now keep in mind, if we just let's take this one off here. Let's say that's our protective stop. I don't know why we'd have our protective stop down that low, but let's put it here. Let's be a little bit less aggressive, I guess I could say. Let's put the protective stop here. Right here at 1925953. Okay. I'm just doing this just to kind of do dumb trading. I'm doing it purposely, like to do not dumb trading, but just to kind of like act like I don't have a clue what I'm doing. I'm doing this purposely because I want to show you like, I guess I want to show you how to figure this out and do it in a way where I'm not being precise about exactly. I want to show you how, like, if I was trying to figure this out from a perspective of like really trying to figure this out using the tools that's before me, like here's how you would maybe do this. The other thing you would do is, here's our other entry right here at 12971 spot 75. So if we go there actually first, we would be down $228 if we got entered here. If we got filled here, that's what we'd be down. And our basis would probably be right here in the middle. It's still riskier than I would like to see, but okay. Let's go with it. Now the loss that we would have on just this position without getting picked up here at this point in time, I know I'm making this more difficult than it probably needs to be. It would be 342. So if we didn't have this position here, our loss would be 342. Now, let me ask you a question. Just from a logical question about how the market works. Not even our trade system. Okay, just how the market works. If price were to get down, I'm making this video much longer than I anticipated, but I apologize. But there's no other better way to kind of like explain this. They don't have arrows here. I thought they had an arrow on this stupid tool or stupid platform. They don't have arrows. Okay, fine. Don't have arrows. I don't care. Because I was going to draw an arrow. But let's say that price gets down to here and picks us up right here. It picks us up right here. On a probability basis, what is the probability that there will be a reaction here? And the reaction might be big enough that you would probably have a basis right here, right in the middle. You have 3 here and you have 3 here. What is the probability that the market will give you at least one chance to get out at a profit or break even at this level here? What is that probability? Meaning that if you get picked up here, you don't get knocked out on your protective stops. And the market usually has a reaction at a level or a low. And you get picked up here, and maybe it exceeds it a little bit. What is the probability that you're going to get the ability to get out at break even? What is that probability? Now, the next question I would ask you is, what is the percentage risk that you're taking here, trading this style? The next question I would ask you is, what is the prospective profit percentage if you traded this style that you should expect? Those are questions that you should be able to answer in your trade system and how you trade. The next question I would ask you is, this trade that I just outlined, does this fit how I recommend how to do fade trades? That's the next question. Does this fit how I recommend you scale into fade trades? The next question I would ask you, should you even be doing a fade trade if you haven't earned your fade trade card? Because what do I say? Master momentum trades and then do fade trades. You could just see here, I was just up $30 or so in that trade. And now I'm in profit. Why? Because it's a fade trade and I'm fading the market. And the market fade trades are not the most successful trades to do. So I'm already fighting the market. So I'm stupid for even doing a fade trade when the market tells me I should have been fading the market. So once again, I'm doing this intentionally because I want you to be screaming at the chart. I want you to be screaming at me, meaning that, dude, you should be saying, dude, you don't do a fade trade here. What the hell are you doing a fade trade here for? The chart says do momentum in a bias trade. Why are you fading, dude? I want you to be yelling at the chart. Okay? I'm doing this intentionally. I want you to see some bad trading. So you've been saying, dude, why are you doing that? Like you're not even trading the system. Precisely. Okay? Look, I want you to see, like, it should be so obvious, especially alphas. It should be so obvious that the way that I just set up this trade was, and I'm glad it's going this way, like right now, because it should be so obvious that that wasn't the trade that I should have been executing. I shouldn't have been doing. Now, it still might work out in our favor, especially if we wait long enough. But what was the trade I should have been doing? So, what trade should I have been in? It's just a simple question. So, like, I just mentioned that just because, I mean, there's a perfect example right here of, to even answer the question that we're answering here, comes down to, are you even trading the system properly? We know that there's 2 types of trades to do, fade and momentum, but are you even doing the highest probability trade, or you do what I sometimes do, you fight the system and you aggressively trade it from a fade perspective when that's not the trade that we should be doing. The trade we should be doing, we should be short right now. The system told us we should be short, and the system told us that. So this negative $50 shouldn't even been a factor. So like I said, this is going to be in one of those videos where the answer isn't the exact answer that you want. But the answer and the way that I've answered it here is how to get the solution for a retail trader. That's how I want you to look at it. Because let's turn our indicators back on. And let's now finish the full thought. I'm actually glad that it would have been worse if this trade would have been profitable. Because, and I'll share why. Because it wouldn't have provided an example that is the perfect example. Which was, and I'm going to put I'm just going to, it might become profitable, but it's a terrible trade because we would have already had some profit and had trailing stops in the market and been on the right side of the market if I was trading the system. On this trade here, if I would have been trading the system, what should I have done? Well, I could have entered 3 lots right here. And then I could have put my stop loss just above. For instance, if this was a short, my stop loss would be this. If this was a short, my stop loss would be 3 here. Meaning that I'm long right now, but my short position, my stop loss would have been here. That would have been an acceptable stop. And if we go up here and we go up here and we see in the DOM, what would have been my loss on that trade? We're at 0.20. My loss on that trade would have been, sorry, I gotta find 0.20. This stupid DOM. Yeah, as usual, this stupid DOM, my mouse moves too much from the DOM to actually move. So I gotta use this here. Maybe there's a way to use this here. Yeah, see, I can't exactly get to that price using my mouse. Of course. Why would I be able to do that? That would make too much sense that I could see it. All right. See, I still can't see it. Friggin' A. So stupid. I'm going to move it up then so I can see it. Jesus. I would lose $70.50. I can't believe that I couldn't get it just by using my mouse scroll wheel. Anyways, 13,021.75 would be $70. I would have lost $70 on that trade. Meaning if I had the stop where maybe would be it would be kind of the right way to put it, is that my stop would be above the RDA, and then that would be how much I would lose. Okay. Would that be an acceptable loss for where the trade's at right now? For where, like, what the room of the trade was at? Meaning when I entered this trade, the room of the trade, well, number one, the room of the trade, and we don't even have the 4-chart layout, but if we had the 4-chart layout, the room of this trade on a 5-minute chart could be down to here. Would that be acceptable loss? Would that be acceptable risk reward? Meaning $70 compared to, if we go down to here, where it's at, let's say 129.71. $72 would be $228. Look at that. Look at how much we're losing. We're such losers. Look at how much we're losing. So we would have made $228 instead of, and then our loss potential would have been $70. Would that have been a good trade? I would ask you. And now we're down $117. So let's do something here. Let's manage this trade. Meaning, I think it's probably going to get down to here. But let's do another 3 lots.
Order filled.
Okay. There's our basis for this trade. Okay. That's our basis. Where should our protective stop loss be? I don't know. Just guess. Okay. Not guess. What I'm saying is create a percentage. Where should our prospective stop loss be? Come up with a percentage based on your trade style. But let's just say our protective stop loss should be down here. We're long, so our protective stop loss is going to be where? We're in 3 lots. We're in 6 lots. Those are our protective stop losses. Let's do this properly. Sorry. Not properly. Let's do this simply. Sorry, this is a little bit longer than probably what you expected. I wanted to be, this is good. It's kind of real world. But I wanted this video to be shorter, but I just kind of rolled with it and saw how it went. So we could lose $618 on this trade right now if it hits our protective stop loss. Still, we shouldn't have been doing a fade trade. So this is the dumbest trade that we could have done. This is just a plain stupid trade. So, but let's do stupid trades. Hey, we want to be dumb. Let's do it. I know I'm using the word dumb and stupid, and I know you're probably told by your parents that I shouldn't say dumb and stupid, but hey, our next entry is going to be here, and we're going to do 6 lots. Okay, still a stupid trade, but we're going to do 6 lots. Now, if this takes too long, I'm going to pause it, or what I'll do is I'm going to record through this full thing. But if I don't say anything valuable, I'm not going to try to say anything valuable. I'll just pause, or I'll just restart the video if we get picked up here. But I'm going to, in real time, allow this to be recorded and traded. And if it gets there, it will. If not, what we're going to do is I'm going to keep this in if I do meaning I'm going to trade myself out of this trade, or it's going to hit here, and then I'll continue to walk through this trade, because there's no reason to me just keep the video on if we're going to wait for it to get down there. So let's see where we're at now, though. Let's see where we're at right now in the current losses. We're negative 147. So if we got picked up down here, we're still within the loss parameter of what I would allow in a prop firm, meaning that you could get out of the trade and you're really close to your $200 a day that you're allowed to lose. Well, if we count the existing trades, you're really close. Now, from a risk potential, would I even allow you to trade and have a potential loss of $351? Yeah. What did I say? I allow you to potentially lose $500 is the way I would set it up. So, okay. You're still allowed to trade if you're in my prop firm. You're still allowed. But you're pretty close. You're being pretty risky. I'd be a little concerned about you. I'd be asking, why are you fading this move instead of trading momentum? And then I'd be asking you, why did you even allow that fade trade to get that far against you? But hey, if you consistently run these risk parameters, I'd be a little concerned, because you're not learning to trade properly. Number 2, you're taking way too much risk than you need to take. And number 3, but if you're doing this and you're profitable every day and you're not stressed out, well, like, what argument could I have? Meaning that if you make $300 a day every day trading this style, well, I might set you aside, or my risk manager would set you aside and say, hey dude, you're taking too much risk. But then you would say, well, yeah, but I make $300 a day, meaning I make 10% a day. So what do you want me to do? Like, this is the argument we would have. You'd be like, dude, I get it. You say I take too much risk, but you give me risk parameters and I make $300 a day, which is 10%. So is it good to make 10% a day? We would say, yes, it's good to make 10% a day. Okay. Well, what's the problem? I'm playing within your risk parameter guidelines, right? You would say, I'm playing within your risk. You've given me the risk parameter guidelines. I'm not breaking them. So, and I'm making $300 a day. I know you'd wish I'd get there another way, but this is how I get there. Now, I'm being extreme just because I'm trying to provide a point. Okay? I'm trying to provide, like, this is the, I've been watching, reading stuff, and I've been in the market long enough. I wish I had 20 years in the market, because then the stuff I would be saying would be even more relevant. But I have I started trading 2016. I was profitable in late 2017, and I've been profitable since 2018. So, look, I only have, it's 2023. I've only been profitable 5 years. So, going on 4, or going on 4. How do I go backwards? Going on 6. I've only been profitable 5 years. So, how valuable is my advice? I'm just being upfront. Well, it's not as valuable as someone that's been in the market for 20 years. But then I hear the advice from people that have been in the market for 20 years, and it doesn't make sense to me. So, what should I do? Should I lie to you and give you the advice that I don't believe and that I don't see based on what I read in books? Or should I give you the advice of what the hell I see every single day? I'm just asking the question. See? Now, let me ask you a question. Did I just get an opportunity to break even on this trade? You probably saw it happen, and I didn't mention it. I did. I just got an opportunity to break even on that trade, and I didn't take it. So once again, I ask you, and we'll continue to let this trade play out, even though I didn't take the opportunity to get out. Did the market give me an opportunity? You can rewind the tape, so to say. Did the market did I just enter 3 additional lots? And did the market give me an opportunity to get out at break even? You can rewind it and you can see. The answer is yes. Did I take it? No. Because why? Because once again, I'm doing this for educational purposes. I'm not doing this for, I'm not doing this to trade exactly how you should trade. I'm doing this for educational purposes. In fact, because of the CMNQ, I'm just going to take this out. Because this is the MNQ, literally, well, we could do this right now. Let's just do this. I'll just do this, and we're just going to see how it plays out. So here's what we're going to do. I'm already about to get another opportunity, but we're going to put 25 lots here, and we're going to put 25 lots here. I could do 25 lots, 25 lots, 25 lots. Okay. But we're just going to do that. And now I'm just going to go super extreme. Meaning that, number one, I'm just sharing an example, and we're going to let this trade play out. We got another opportunity to get out. I'm probably going to pause the video or I'm going to record, but then I'll cut off if there's nothing happening between now and these 25 lots. Once we get picked up for one of these 25 lots, then you'll see how the trade unfolds. If not, the next opportunity I get to get out at break even or make a profit, I'll take it. So that's the plan. But I'm doing this because, once again, what was the question? Question is percentage profit on the account and percentage risk. And once again, I knew going into this video, because I planned it out, that I can't answer this properly in a way that is going to satisfy you, but I can answer it in a way that probably is going to take longer than you want, but it's going to answer it in a way that gets you to the answer yourself, because there's no one answer for everybody. There's no one. I can't even answer this question for you because I don't know your capital level. I don't know your trading style and how you trade the Rexdog system. So I can't answer this question for you in a way that I think is best. And I know that sounds like a cop-out. Maybe it does, maybe it doesn't. I don't know. But look, if you watched any of my videos, I mean, if you're an alpha, I don't need to tell you this, but if you watch any of my videos, I try to focus on the reality of the market and trading. I don't come up with these fluff answers that aren't real. This is one of those situations. I could say 3%. I could say 15%. We've already went through this. I can give you any number. What I'm sharing with you in this video is the reality of what it takes to be a successful retail trader from my perspective. So use the fundamentals that you're learning in this video and put it through the prism of the trade system that you're trading with, knowing, see, this is the other thing that you need to realize. And I should have mentioned this in the very beginning. Maybe I'll start the video with this. The trade system that you trade has risk profile built into it. And this is so long in the end of the video, we're probably about an hour in. 1% of the people watching this video are the reals, what I call the reals. Meaning that if you're watching the video at this point in time, if you don't become a successful trader, I'll be surprised. Because if you're watching this video now, some people might have dropped off because they don't like my style. So I get it. Not going to be for everybody. But if you're watching this video now, you have the ability to have attention and grit. You have one of the elements that I believe it takes to be a successful trader. So, like, put that in your pocket, I guess is the way I would say it, and take it out when you need to use it sometime in the future. Because the concept and what I've covered in this video didn't give you the clear and concise answer that most people on YouTube are looking for. Because they want a button they can push that when they push that button, magical $100 bills come out. That's not the way trading works. Trading's difficult. Trading's messy. Trading's hard to figure out, even if you're given a system. It's still hard to figure out. Because it's not just the system. It's you. It's your mindset. It's your psychology. And it's near impossible sometimes to kind of account for every psychological trading disorder that exists. It's just impossible. So in this, and I'll wrap this up with just a clear way to look at this, but this, and I'm not talking kind of on multiple levels here, but look, if you have the fortitude to be here in this video and to get the concepts and what I'm talking about in this video, then you have the fortitude to take my system, make it your own, and be successful with it. This would be one check I would add, one way I would put it. That's why sometimes I create longer videos. We are going to get better. Like, we're going to get better at really short videos, really concise. But I sometimes create videos that are expansive. Because what could I do? And I'm just sharing this because we have a little bit of time to kill here. What could I have done? I could have recorded this, deleted it, or edited it down, and redone it. That's one thing I could do. I could say, whoa, this is like an hour and 30 minutes. Like, no one on YouTube is going to watch that. Plus, I go off in a couple different rabbit holes. Okay, I can answer that question better. Sometimes I do that. You don't even know about it. Sometimes I record a video and I go on for about 20 minutes and I watch it. I'm like, you know what? That was the practice. Even if I have it bulleted out, I'm like, that was the practice video. And then I redo it just because I want it to be better. But other times, I do what we're doing here. I have it bulleted out. I have an idea on how we want to end and how I want to go. But then I get into it, and then as things unfold as we get into the charts, and maybe if I'm doing a live trade like here, like I use it as an example to further solidify the concept that we're talking about. Not for everybody. I get it. My style's not for everybody. Everybody would like, within the first 2 minutes, I say, okay, well, if you have a $3,000 account, the most you should risk per trade is 2%. Maybe that's the number. I don't know. Actually, I do know. It's not the number. So, but maybe that works for you. Okay. And I'm sure there'd be a lot of even successful traders, even trainers that would say the way that he's explaining this in this video is wrong. It's 2%, or it's 1%. You should risk no more than 1% on every trade you do. Okay, fine. That's their opinion. Right? And it might even be backed up by stats. I don't know. Who knows? I can just tell you the stats. I've looked at it. And the real world trading, you can't provide stats like that. Yeah, because if they could, like I said, I'm not going to say it outright. But what is the implications if a trader can tell you exactly the percentage risk that you should take in on every trade? Think deeply about this, okay? If a trainer can answer the question for you, precisely what is your risk reward on every trade that you should take in my system, and it could be calculated. This is a serious question, serious philosophy I want you to think about. If a trainer tells you that on a daily basis with my trade system, you should average 5%. I'm not telling you this. I want you to think about this. If a trainer, not a trader, okay? A trainer, someone that trades successfully and they're selling training to you, or they're selling, or not even selling, they want you to adopt their trading system, okay? Let's take the sales out of it. Meaning that they say they're a successful trader, they share their P&L, and they say you should trade my system. And they can give you the precise percentage risk reward that you should take on every single trade. They can tell you the precise risk reward, and they can give you statistical data about it. Okay? What is the implications of what I just shared with you? Like, if they can do that, what does that mean that they should be able to do with their system? What does that mean if they can do that? That's all. That's the thought exercise I'd like you to think about of what that means. So if they can't provide that, well, number one, if they provide that and they're not doing the implications of what that system, what the opportunity that exists if they can do that, if they're not doing that with their system, what does that mean about the advice that they're giving you? Thought exercise. It's just a thought exercise I want you to do. Once again, the amount of people that are going to get to this part of the video is so low that you're getting knowledge. That's sometimes why intentionally. I know it's opposite of what I should do. It's intentional. I'm sharing a little bit more behind baseball stuff just so you get it. If you're listening, if you're here, I intentionally don't share the most valuable content of my ideas and videos in the beginning. It's intentional. Why? Because I don't want people that are just at the beginning of the videos. I don't want that person to join the system. I want the person that is here right now. That's who I want to, that's who I would consider for my system, because I talk to everybody before you can join. I don't want, and like I said, I'm sharing a little bit more behind my strategy of why I do videos the way I do, why I do content the way I do. I share some of my best ideas, my best thinking. It's not like I don't reveal them. It's not like I hide them from you. But I share them at the end of the video or near the end. Why? Because the person that I want to be an alpha, the person that I want in our community, is the person that is going to be here right now. The person that has the fortitude to stick towards the end of the video, or let's say you're playing it on 10 times the speed or 3 times the speed because I talk slow. The person that will play the video at 5 times, 3 times the speed, but get to the end. That's the person I want to, that's the alpha I want. That's because that person, if you fit that criteria, number one, you're getting the knowledge that I think is the most valuable. Number two, you're proving to me that you have, well, you're proving to yourself, but you're proving to me too that you have the ability to be in the marathon that trading is, and that you're just not you don't have goldfish type attention. So I'm just sharing just like some of the strategy, or if you even care, like why sometimes the videos that I have are done a certain way. So I'm not explaining that to share like, oh, I'm doing some 4D chess out here. It's not that level. Trust me, I'm not that smart. I'm just sharing that, I intentionally kind of make it a little bit harder to pick up what I'm laying down, what I'm putting down. Not because I want to frustrate you. Now, in the training, in the alpha videos, I need to go back to some of the training, and I need to redo some of the training and make it much more clear and concise. That I've been talking about for months now. So that I'll be doing. But for YouTube videos and videos that go out to the public, right? In air quotes, like, look, I'm not here to I'm not here to get the lowest common denominator a person to start trading the Rec stock trade system. I don't want the lowest common denominator of people to become an alpha. That's not who I want. I want the at least upper tier of people that are out there in the public. So since I knew this video was going on YouTube, and I know I'm talking through this while this trade's going out, so, but since I knew that this video was going out on YouTube and Rumble, or was going to be publicly available, I'd do it in the publicly available style. I'll also do probably a shorter video now that it's much longer, just to kind of concisely answer your question, or the question, because it's not really fair to have this really longer video when I should have answered it in just my typical bark, which is about 10 to 15 minutes. So I'm going to go back and summarize this for members. But I'm going to release this on YouTube because it fits the strategy that I like to employ on YouTube from time to time. And of course, if you're watching on YouTube, then you're understanding some of the strategy I employ on YouTube. So, you might agree with it or disagree with it. You might say, well, dude, if you're publishing on YouTube, you should do value first. You should be doing, you could have done, this video could have been done in 3 minutes, 5 minutes. You could have got all your points across in 3 to 5 minutes, and you would have provided value. And in that case, you would have had more people interested in your system and interested in joining and becoming part of your system. You might say that. Okay, fine. Once again, off on a tangent completely outside of the value of this video, but you're learning a little bit more about me and my style and what I do here. And I probably will, because it's getting late and I need to actually sleep so I can get up and trade, because I'm starting to feel tired, which is good for my treatment cycle. So I think what I will do is actually end this video, because I don't think the trades, it's the night session. So this could take 3 hours or 2 hours to get down to my 25 lots, my 50 lots. So I don't really want to wait for that to happen. And there's only one other point I would add. The only other thing that would happen in this video is you would see I would get picked up here at 25 lots. And then within probably 30 seconds to a minute, if not quicker than that, I would get the opportunity to break even on that trade or make some profit. It's still not the right way to trade this, but what I just wanted to show is that I'm well capitalized, where I could trade 25 here and 25 here, and it's relatively low risk, especially if I had a protective stop in here, from my capital size. Now, whether or not it's right to only, let's say I only make $30 on this trade, was it a good trade? No, of course not. But did I make $30 on it? And did I, so yeah, there's kind of more of a right answer than not. But am I trading against the system? Yeah. If I was trading a momentum trade here, what would have been my risk? Look, my first risk is the momentum indicator and the RDA. That's my first risk. Like, I would have reversed already. I'm just trying to show you, like, from a extreme risk example, trading against the system, could you still make money within risk parameters trading badly? That's the point I was making. That's the point I'm making. I'm not saying you trade this way, but the point I'm making to answer the question is, could you actively manage your trade with virtually no stop losses? Be profitable. And how would you calculate the risk parameters and the risk profile of what you've seen traded here? But if I could do it consistently every single day, which is still not the right way to trade, I just want to preface that. But if I could trade this style consistently every single day, and every single day I made 10% on my account, what would you say? Now one thing you might say is, well, there's going to be one day where that's just going to wreck you. You're right. Of course. Yeah. One day, this style, I'll be wrecked. Not wrecked, but I'll lose a lot. And maybe I would lose 10 weeks, or maybe I'd lose 3 weeks of work in one day. Okay, that's not a good style, I agree. But let's say it was only 5 days of work in one day, but then it only happened 3 times a year. Or let's say it was 3 weeks. Let's do this scenario. Let's say this happened 3 times a year, and 3 times a year I lost 2 weeks of work. Meaning I was profitable every day, except for there were a couple days a year where basically I lost 2 weeks of work. Is that a successful trading style? I just ask. And then what's the percentage numbers in that? But then, well, let's say one day a year you lost, I don't know. This is a good way to think about it. You lost 50 profitable days. Is that a successful way to trade? No. If one day you could lose more than 2 weeks of trading, it's probably not and 2 weeks is probably extreme too. But if one day you could lose, your trading style could lose 50 days of successful trading, you're probably trading completely wrong. But the way to look at it is, let's say that one day of bad trading your style, you could lose 2 weeks of trading. But it only happens 3 times a year. You can do the numbers on that. What if it was more? Or you can do it in different style. You can say, well, what if 3 times a year I lose 5 weeks of trading? You can do the calculation there. Like just on average. You could just say on average. And the other thing you should do is, okay, if I have a 3K account, how many times could that average losing day pop up for me to be liquidated? That's the other question you can answer. Once again, this video is much longer. It's also contrary to many of the other answers you would get to this question. But I want you to discover the answer for the way that you trade the system, not the way that I recommend. Because here's the other thing, is that I could share for you the exact numbers I would think, but I don't, because if I share with you those numbers, it would be a limitation that is artificial to the way you trade. And let me explain that. It's my interpretation of how you should trade the system that is limiting you. And you're going to put more faith in it because from your perspective, I'm someone you look up to as a trader. Now, you might say, of course, I want your advice, and I get it. But I don't want to give you advice that limits your potential, because it's bad advice. Once again, I keep feel like I'm explaining myself on this stuff. It's because what I say often is contrary to what other traders teach, other trainers, and other things you read in books. But why would I risk answering the question to you in a way that would limit your belief, even though it's probably right? Meaning that if I told you the most you should think about making on a 3K account is $300 a day, well, it's not true anyways. I don't believe it. But let's say that I'm taking the perspective, okay, well, I want this person to not trade risky, and I want this person to actually really do a good job, and I want this person, I want this person to you know what I mean? I want them to be totally protected, and the most they should lose is 1% to trade. Okay, I could answer the question that way. But it's BS. I don't believe it. But could I answer it honestly? Meaning that, could I feel good answering the question to you that way? Yeah, I could feel good about it, because I know that I'm answering in a way that would limit your risk. But here's the thing. It's not the truth. It's not what I believe. And I just contradicted myself, you would think. I would believe it on one level, but it's not the authentic truth. The authentic truth is, I'm not going to give you, I got to put a disclaimer here. I'm not a trader. I'm not a financial consultant, whatever. Or not whatever. I'm not at all in any way. But I wouldn't try to provide the answer in a way that would limit you trading the system at a highly effective, aggressive manner. So, and that's the problem. The answer to the question is somewhere in the middle. And somewhere in the middle is still too risky from a new trader perspective. But if you can pull it off, you'll be wildly successful. All right, I was just rendering or about to render the video and go to bed. And then, of course, once again, look at this here. The market, I should have been doing a fade or a momentum trade. I shouldn't have been doing a fade trade. Just more proof of what I say every single day in trading is that the market provides you, or the system provides you with the high probability trades, and we were fighting the system being stupid. Why? I'll improve, or I'll increase this so you can see. I got picked up for 25 lots, and we have more than enough to do another 25 down here. But we're down $186. Now, is this risky? Of course, this is extremely risky. Because if it rips down if it ranges down, there's another range down here, well, we're not going to just lose $250. We're not going to lose $300, but we would potentially, there's a potential to that this trade, the way we're trading it, could liquidate our account. So yeah, I'm saying at a $3,000 account is what I'm saying. I'm not saying that my account. I'm just saying that there's a potential here that this could liquidate my account if I was trading 3K. So it's aggressive trade on a 3K. I don't even think you could do this on a 3K account now that I think about it. I don't think you could trade I don't think you could trade 50 MNQs on a 3K account. I'll have to do the calculation, but I don't think you could even do it. So you wouldn't even be able to execute this trade on a 3K account. The other thing we could do at this point in time, now we're not using the 4-chart layout, is that, well, we'll wait for this entry here to get picked up. So we have, what time is it? We have 1 minute till this candle is going to close. So we're not going to risk getting picked up on this candle here. We're in 31 lots. And we get an opportunity to do another 25 in the next candle. But we got to wait for the close. So let's wait for the close. And we're going to do this in real time. So I'm going to make you suffer with me. Or because you're watching the video, you could just skip ahead. So you could cheat. But I'm going to make you suffer with me to sit in the overnight session to see if we're going to be able to make money on this trade. Sorry. But you get to cheat. You could actually skip ahead in YouTube and like, oh, okay, I found it. Didn't have to wait through that 2 minutes of this. Okay, next candle, we got the close. Now we could enter right now, but we get another opportunity in this 5-minute candle to do an entry if we want to. But now we're in profit. Well, not in profit. We're able to break even relatively. You can see here the number. I'll zoom in a little bit more so you can see it. We're on the bubble. We did get an opportunity if we did a market entry to break even. But we're going to give the candle a little bit of time. We're 1 minute and 40 seconds in, we're only 45 seconds in, sorry. We're going to give this candle at least to the half of this candle, and then we'll decide whether or not we're going to add the other 25. Meaning, okay, this 5-minute candle just closed. We got the close there. The close held this level. So now the aggressive way to trade is that you get too aggressive and you enter now with the expectation that this 5-minute candle that we're seeing right now as it's forming is going to close above our entry, or at a minimum isn't going to close below this level. So, but we just have to give it time for this 5-minute candle. We don't want to do it. We don't want to enter at the beginning of this candle, because this 5, and keep in mind, what else don't we have here? We're not using the 4 chart setup. So you, as an alpha member, you should be saying, well, dude, we could have the 4 chart setup and we would have some information already defined. You're right. That this shows you the power of the 4 chart setup. Because if we had the 4 chart setup, you'd be saying, well, let's look at chart 2. What is chart 2 telling us, man? You'd be saying, what does chart 2 tell us? Okay, now we're getting an opportunity to make some money on this trade. Look at that. We're ballers. Damn. We're balling out of control. Let's see how this works. Let's give an opportunity to rip up. Or we've just got another opportunity. Once again, the market gave us an opportunity to make money, cover our fees. We would have had to take that trade quick. But let's see. Okay, now we're at the point where we would maybe want to consider adding to this trade. Maybe. But at this point, what I would do, I would not use our full powder. I would do this. At this point, the way I read the price action is I would do this. I would do that. That's how I would do this. At this point of the 5-minute candle, just the 5-minute candle, that's what I would do. And then we're just going to wait, see what happens. One of two things is going to happen. We're going to get picked up, and we're going to get another opportunity to break even, or this position here is going to go in profit before the end of this 5-minute close. That's the only two things that are going to happen. Okay, there's obviously other things that could happen, but that's what I'm trading against. Actually, this needs to be moved down a little bit more. That's how it needs to be traded. Nothing to say here, so sorry. I'm past my time to go to sleep, so I was going to render the video down, but of course, the trade unfolded where I thought I could add more perspective to the video that we've created. So this next candle is about to close in 20 seconds. Negative 108.50, negative 93, negative 62. Candle just closed. All right, we got another level. Held the level below. Reaction to that candle. Hit momentum. We expect a
order
reaction.
filled. Order filled.
We got picked up for 10. 10 more. Once again, I guess I should give context. This is a high risk way to trade this strategy. High risk. I have no stop losses in. I don't have a protective stop in. I have no protective stops. I'm trading this strategy from perspective, I'm in an MNQ. I'm trading the MNQ in an account that I could trade this same size on the NQ. So if you want to know the capital level that I'm trading at, I could trade this same trade in the NQ. Just the way we're trading this now. It would be just as stupid, but I could do it. I'm not trying to show bad trading. I'm just trying to show you an extreme example of like answering the question. That's all I'm trying to do, okay? It's stupid trading, though. I know you're not supposed to use the word stupid. There's no stupid questions, but you're probably not supposed to use stupid nowadays. But you know what? This is stupid trading. But is it? Okay, you might say, well, no, it's not, because you're in profit now. You're up $238. Well, I was for 2 seconds there. You might say, well, dude, you're up $74. You're up $200. And then this would be an awesome swing trade. Okay, yeah, but did we go into this with a swing trade perspective? No. And would it even be the best way to swing trade? No. So we got to wait for this candle to close to even have the answer whether or not we should get out of this trade. So it's really, if you think about this, just to further belay the point, I guess, is this going to be a profitable trade for me? Am I properly allocating my capital? Am I properly managing my risk? But if I could do this trade day after day, and it only hurts me 3 times a year when I trade this way, and it only takes out, when it hurts me those 3 times a year, it only takes out 2 weeks of trading. Is that good trading? I don't know that. I'm not going to give you the answer. I want you to think about it. Look, we're going to make $600 on this thing probably. I mean, actually, what? Let's not even make $600. Let's do this. Let's just do it this way. We'll do trailing stop. Okay? Save. That's huge. It's big. Let's take out, well, number one, here's the thing. If we just to make it even, let's just sell 1. We're going to join the ask. Let's just sell 1. Well, mind, I'm going to get picked. We're going to lose money on that 1 sell because the first FIFO. So, okay, dude, take me out. I want to make a point here, market. Take me out.
Order filled.
Thank you. Jeez. I want the market to take me out of a trade and won't even, well, it was a takeout in profit. I wanted the market to give me a loss and it didn't give me a loss. So now I'm going to put 4 trailing stops in profit. So technically, we can't lose on this trade. Technically, all of my trailing stops are in profit. We can't lose. We're winners. I got 40 different, or I got 4 trailing stops at 10 lots apiece. We're in profit $700. We can't lose. We can only win.
Order filled.
I took some off there, okay? But notice we didn't make any money. Why? Because our basis isn't that great. So I didn't make any money. And just to be obvious with this, so you know fully, in case you don't understand why I didn't make any money there. Well, we're losing $56 right now because my basis for that position with FIFO means that even though I took 10 lots off, it looks like I'm profitable. Those 10 lots weren't profitable. But we're still in profit. We're still kind of guaranteed some profit, I should say, if everything in the market works the way it works 99.9% of the time, meaning that these stop losses we get knocked out on these stop losses. Pretty much guaranteed to make some kind of profit. I'm wondering if I should just pause it. Well, number one, I'm already past the time I wanted to stay up for this trade. Damn it, Jim.
Stop filled.
All right. Now we made $222. See that? And then we still have open profit of $615. So now pretty much any money we make from now on, we're going to be in profit in this trade. It's not going to be that much if we get knocked out down here. But we're guaranteed now. I say guaranteed. If the market works the way it should, meaning that these stop losses don't get ignored, we are kind of guaranteed to make at least $222 minimum of profit. That's including our fees of $57, which is extremely expensive. That's the max you could pay in fees. But this account, you know, I don't know if I should I should even explain this. Well, yeah. Why? I just don't tell it. I intentionally, I do so many things intentional that goes over so many people's heads, they don't even realize. But I do it just because I want to be authentic. That's how stupid this is sometimes. I say stupid from like the stupid, like how bad was used in the 80s. Bad was used in the 80s. It was cool if something was bad. Well, I'm using stupid from that perspective. The fees I'm paying on this account is the maximum you would ever pay. But I should, number one, I make in one day enough to pay for a year to reduce all my fees to the lowest amount in one day. But I intentionally, in this account, this brokerage with this account, I intentionally do not buy, I intentionally pay the most amount of fees. That is, so when I stream, this is what's even crazier, which none of you guys, you don't even realize. And it's intentional. I never bring it up. This is the first time I probably even brought it up. Maybe I brought it up before. I don't reduce my fees. So that's why, I say the biggest hit to my P&L is when I stream. Because number one, I trade differently. Number two, I pay max fees when I stream. Because I want to give you, if you didn't pay for reducing your fees at all, you can still profit paying max fees. Like that's the level of reality that I want to provide when I trade. Like, when I thought about how should I stream in my account where I reduce my fees to virtually nothing? Or should I stream in the account that I pay max fees? Which stream should I stream? Which account should I use? You know the answer now, obviously, because you see I'm doing it. So, I should take another profit here, shouldn't I? So we should take another profit here.
Order filled.
Which I just did. And then what we could do if we want to further manage this position this is a fade trade, so we shouldn't expect to have a runner. I took profit at another high probability area. Now, if we wanted to super manage this trade, what I mean is we want to provide what we do. This is our last position in this trade. It's a fade trade. Well, let's divvy up our last 10 lots by twos. We'll do 5 trailing stops. So this is one way you could do this. Basically, okay, I've already made $723 on this trade. Now this is my runner position. But with my runner position, let's divide my runner position up even more. Where, okay, I'm going to try to maximize my profit on 2 of these positions. And then the rest of these positions, down to here, I'm going to give it room to maybe 2 of these lots will just continue to run and I'll just make more profits. But now I just divvied up my last runner to go with this trade. And you might say, well, why didn't you just wait? Well, okay. I didn't know that it wasn't going to fail here. I don't know if it's not going to fail right now at the RDA.
Stop filled.
So this is a fade trade. Take profits. Allow for a runner. Like I'm allowing for a runner in this trade here. So look, I'm even adjusting it as it's going. Giving it even more room. So I ask you, I ask you, this trade you just saw unfold before your eyes. How do you classify it? Given how we started this video over an hour ago. Was it a successful trade? Did I execute it successfully? Could I repeat this trade? Should I repeat this trade? But if I could repeat this trade and make $845 every time I did this trade, and let's say, well, let's answer this way. Let's say that I either broke even on this trading style or I made $845 on average. What is the percentage $845 is to $3,000? But we're not even done. Meaning, well, let's say we make $1,000 on this trade with a $3,000 account, which I don't think we could have executed this trade on $3,000 account, so we're kind of being unfair. But let's say that, well, we could have, I think. I have to verify. What is a $1,000 of $3,000? I'm just asking.
Stop filled.
Is it not 33%? What is $1,000 of $3,000? Is it 33%? So if I would have started this video and said, you know what? Your average profit on a daily basis should be 33%. That should be your average profit. Your average risk should be 50%. Or your average risk is that you should risk being liquidated on every trade you do. And your average profit should be 30%. What if I answered the question that way? Would it be right? Would it be the right way to trade? Only you can answer that question for yourself and you adopting the Rexstock trade system. For me, this is still the wrong way to trade. But can you argue with the results? Can you argue, and I know I'm making this belated, I'm making this longer. Can you argue with the fact that I'm going to walk away with the ability to, at a minimum, put $955 in my pocket if I stop trading today? And just, I want to go extreme here, okay? Let's say this is the last day I wanted to trade. And I started with $3,000. And I ended with roughly, $357 open profit. And I ended with $1,000. Did I beat the casino? Did I make more money than I put in? And did I walk away with $1,000? Meaning I just close this account and I just deposit I get a withdrawal and I close this account and I just put it all in my bank account. So, once again, this video is much longer. I highly doubt that there is going to be more than, well, my average video now gets about 100 views a video. I'd be very surprised if there's more than 3 to 10 people that are still watching the video right now.